It's been over 2 years since I started buying Cleanspark, and I can tell you it's been quite a roller coaster. Now, I've had higher percentage losses in other investments like Shift Technologies, but they still don't compare to the mistake I made with Cleanspark. Despite the company continuing to grow more than I expected, the stock price has been a source of frustration and disappointment for me. So here are the details from why I initially invested in Cleanspark to what went wrong and what I predict for their future. But I don't want to waste your time, so let's go ahead and dive right in. When I first started investing in Cleanspark, they were an energy management company. But as time went by, the company shifted its focus to the Bitcoin mining space. At first, I was excited about this change because the potential seemed much greater than the energy business. However, I didn't consider one major factor: the fluctuation in Bitcoin prices. I invested heavily in Cleanspark, and it quickly became one of my largest positions. Despite their impressive performance and exceeding their projections over the past couple of years, the drop in Bitcoin prices was beyond their control. In retrospect, I realize I overbought this company and it should have been a much smaller position in my portfolio. Even though Cleanspark turned out to be my worst mistake, I don't regret buying the company or adding to my position after they changed their business focus. I was optimistic about their move to Bitcoin mining and believed in their potential. However, when a company's product sees a drop in price by over 50%, it becomes difficult to accurately project revenues. This is exactly what happened with Cleanspark. Despite the company's impressive performance and their ability to outperform their competitors, the fall in Bitcoin price hindered their business. Okay, let's be real. Cleanspark wasn't the best investment for me, but there's still stuff I love about them. I mean, I really like the way they've handled their balance sheet because they've sold Bitcoin in order to purchase more miners and grow their hash rate, which I think is a smart business move. Second, they have continued to outperform their competitors and have now mined a significant amount of Bitcoin in January. And they have also focused on their wholly owned mining facilities instead of relying on co-location. So in my mind, there's a lot to love about Cleanspark. However, there are some challenges Cleanspark is currently facing. Bitcoin prices being lower than the start of last year will make it hard for the company to beat its past performance, especially in the first half of the year. The company had to reduce its hash rate because of the Lancium issue, where capital constraints affected their ability to meet commitments, and now the completion dates have been pushed into late 2023 or even later. Now, Cleanspark expected to mine at a rate of 16 exahash instead of 22.4 exahash. In addition, negative net income over the past few quarters is a concern, so it's important to see improvements in this metric in order to restore investors' trust. These challenges should be taken into account as we look forward to the upcoming earnings report. Now, we're expecting to see a boost in hash rate on Thursday, but slower growth in the following 2 quarters before picking up again in the 4th quarter. Despite the fact that Cleanspark ended the year with 6.2 exahash, which was significantly higher than their original projections and showed tremendous year-over-year growth, it's worth considering that Bitcoin prices were double what they are right now. The growth may not look as impressive given the current Bitcoin prices, but if you believe that Bitcoin will return to its previous highs in the next few years, Cleanspark's growth, especially in the latter half of the year into 2024, should be strong. In the upcoming earnings report, one of the primary focuses will be on Cleanspark's balance sheet. The company sold a significant amount of Bitcoin in the past quarter, and it wasn't until January that they added Bitcoin back to the balance sheet. This may result in a smaller balance sheet with less Bitcoin and lower cash reserves. However, it's important to remember that Bitcoin is the company's main currency. While some may argue that Cleanspark shouldn't sell their Bitcoin, it's similar to telling companies not to sell their products even though they may be worth more in the future. People who hold this viewpoint often overlook the benefits of using shares for acquisitions instead of diluting them to raise cash. Acquisitions have a much higher rate of return, so if the return exceeds what the company would make from holding Bitcoin in the short term, then it's wise to sell the Bitcoin. The second aspect that I'll pay close attention to is Cleanspark's revenue. When it comes to the company's revenue, the decrease from last year's high Bitcoin prices should be taken into account. Analysts are forecasting a drop in revenue of close to 30%. Although the first quarter may not reflect impressive numbers, the comps will be easier to beat in the second half of the year. However, despite this, the company is still expected to see growth quarter over quarter, which is a positive sign. Nonetheless, I am not anticipating a significant amount of revenue this quarter. In addition to the balance sheet and revenue, the third metric I'll be closely monitoring in Cleanspark's earnings report is the company's EPS, or earnings per share. While it's expected to show a decline year over year, we should see some improvement quarter over quarter. According to analysts, the EPS for this quarter is predicted to be negative 62 cents per share. However, instead of relying solely on this metric, I prefer to focus on adjusted EBITDA, which takes into account earnings before interest, taxes, depreciation, and amortization. It's important to note that Cleanspark should retain a positive adjusted EBITDA and show growth in this metric on a quarter-over-quarter basis. This will provide a clearer picture of the company's financial performance and profitability potential. I'm not really worried too much about their earnings in the future. I think this quarter's earnings won't be impressive despite the amazing growth that we have seen. With the recent crypto winter, it's not surprising to see a dip in earnings this quarter. However, what sets Cleanspark apart from the other Bitcoin mining companies is their focus on using their capital to acquire more hash rate and mine more Bitcoin. So even though this quarter's earnings report may not be impressive, it will give us a better understanding of the company's capital utilization and whether they are able to maintain a positive adjusted EBITDA. In the long term, this is what will make or break a Bitcoin mining company, and I am confident that Cleanspark will be able to weather the storm and continue to grow. So while the short-term earnings report may even miss analysts' expectations, it's important to keep in mind the long-term picture and the company's capital utilization strategy. Unless something major is revealed during the earnings call, I am not concerned about selling shares. Now, when people talk about the future price of Bitcoin reaching $100,000, it's important to be cautious. The value of Bitcoin can be tricky to determine, especially with its big price swings. Sure, there's value in having a limited supply of Bitcoin and what it might be worth in the future, but we're just not there yet. There needs to be something to push Bitcoin back up to those high levels and beyond. But I have to warn you that it took 3 years for Bitcoin to reach its previous peak after hitting $20,000 in 2017. That's why I'm being very careful with my predictions. I'm not planning on Bitcoin reaching $40,000 or $50,000 a coin this year. Although I do think that it could happen. I need to keep in mind that Bitcoin might not grow as quickly as some investors hope. Now, I believe in Bitcoin for the long run, but I also want to be honest with myself. With the current state of the economy and some challenges in the crypto industry, it might take a while to reach previous highs again. Although these challenges could bring more regulation, which could actually benefit the price of Bitcoin, it's better for me to have low expectations and be pleasantly surprised than have high hopes and end up being let down. The financial health of a company is something to take into consideration when evaluating its potential as an investment. For Cleanspark, they have about $450 million in total assets and $48 million in total liabilities, resulting in a stockholder equity of over $400 million. This strong metric could indicate the company seeming undervalued, as the company's market cap currently stands at $260 million. And personally, I have faith in the management team. They have shown their ability to grow the company at a very fast pace. In comparison to their competitors, this company is valued significantly lower, making it a no-brainer to be a part of my portfolio, despite me losing a good amount of money. I understand that the value of Bitcoin depends on a person's perception of it. If people were to lose interest in Bitcoin, it could negatively affect the price. Now, even though I don't expect it to fall drastically more than it has already, it's important to acknowledge the risk. I can't make Cleanspark my top investment due to its potential fluctuation in Bitcoin value. However, I do believe that this company has the potential to provide a high return on my investment. So we will see what happens to Cleanspark's earnings on Thursday. But if you haven't seen the top stocks that I'm buying for February, click here. Hope you all enjoyed this video, and I'll see you in the next one.